Let's talk about the cost of home equity lines of credit and how they changed over the years. We deal with this every day, at work, because people are still sometimes in the early 2000s where home equities were kind of given as candies, almost for free, and people didn't have to pay for closing costs. They were just getting them. A lot of people have memories of them, but things really have changed. Home equity lines of credit are a lot harder to get these days. The requirements are stringent. We do have a video, and you'll have a link to that in the description, where we describe a little bit more what a home equity is. So there is pretty much a full closing cost that people should be expected to pay, as if they're getting just a regular mortgage. So let's say it's the amount is $200,000. You want to apply for $200,000 mortgage or $200,000 home equity line of credit. The cost is going to be the same, if not more sometimes, to get the home equity line of credit. Number two, banks obviously want to get their money. So when you take the line of credit, they want you to get some money at closing, not just have like a credit card. When you want to use it, you can use it. Yes, you can do this after a certain period of time, but in the beginning, they want you to have what's called a draw. In other words, you applied for $200,000, you received $200,000 line of credit. Please take $100,000 at closing and do not return it. The bank wants you to pay the interest for a few months so they can pretty much make their money. Because you can take the $200,000 if you don't take any money at closing. You can keep the line for 3 years, then return it and close it when you sell the house or you decide not to use it anymore. And bank pretty much loses. They have all these years. They have reserve requirements from the banking departments. They have a cost to originate. The short of it is that home equity line of credit, even though it is still a great tool, answers questions people have when they need money, especially now when you might have a first mortgage, let's say 2-3%, and you don't want to touch, but you want to tap into the equity of your home. The home equity is the answer most of the time, or a lot of times. But please be aware that it's not free anymore. It comes with a cost. It comes with a little bit of inconvenience where you have to take the money, and the rate is obviously much higher because it is tied to what's called prime rate, which is right now 6.75. Now, it may not be exactly 6.75. It could be 6.75 plus 1%, plus 0.5%, minus 0.25%, depending on other parameters like your credit score, the amount that you're taking. And by the way, it's variable. The 6.75 prime rate will go up and down, and with that, your home equity.